We've got positive cues coming in from overseas, and yesterday we wrapped up the session at the brink of that 18,600 mark. In fact, it was commendable that the broader markets actually saw a nice degree of outperformance, but it was pretty evident that you had the outperformance within the broader universe, while the frontliners continued to remain in a very tight range. 11 straight sessions, and we've been following this pattern pretty much. Of course, now all eyes as to what the US Fed is likely to do. But in terms of the trends that we witnessed in yesterday's trading day, you had financials, which were the big drag, while IT did manage to take center stage on the upside. And it's interesting, Nikunj, because the last 14-year data shows that both moves have been in the opposite direction 70% of the time.
So let's first understand what the markets are telling you, Avan. I mean, markets are essentially telling you that they want to go higher, and they're just taking their time. Nifty is facing resistance around 18,600. We all know that, we've discussed that. I think it's a matter of maybe one good day, little bit of global cues, some news trigger here or there, and then markets are going to cleanly go and make a new high. I don't think just because markets have been in a tight range in last 11 days, that is signs of any kind of a retreat or the fact that the bulls are running out of ammunition. I don't think it is like that. I think broader markets, they continue to outperform, and market setup is clearly indicating that markets, they want to go higher. So I don't see a problem with the market setup. If at all, the inflation data is decent. If at all, the global cues in terms of where crude prices are moving, that is great. The chink in the armor, I think, is monsoon. The jury is not out whether we are in for a bad monsoon or whether we are in for a late monsoon, which will have a marginal impact on markets, on the economy, and on the sowing season. So fingers crossed that we are in for good monsoon. Barring that, I don't really see that there is a huge negative. Just because markets are consolidating, it does not mean they will go down. Just because markets have gone higher, I don't think it is they're due for a correction.
Okay, so the market is taking a bit of a pause, a bit of a consolidation, but that necessarily doesn't mean that it's headed downwards. Maybe it's just making that foundation for the higher highs that might be coming later. But as we pointed out, there are a lot of data points which are actually quite positive. So the question is, are the key headwinds behind? Because 7 out of 8 data points do look quite positive. Case in point being the macro data that we got overnight. The CPI data for India came in at a 25-month low. So that entire worry about the rate hike cycle ongoing seems to be at least ebbing away at this point of time. The CPI came in at 4.25, which, as we pointed out, is at a 25-month low. The other data which was quite positive was the IIP data, and that was a bumper number that we got. The street was expecting there'll be a 1 to 2% growth coming in for April IIP. That's actually coming at 4.2%, and that's been led by manufacturing, which has been one of the verticals which has been doing well, as well as consumer durables and other spaces, something that we watched out for. Yes, electricity was a bit somber, but nonetheless, it was mining and manufacturing that led from the front. Not just that, today you also have the positive news in terms of the crude prices, which fell almost 4% overnight. The Brent crude right now is sub the $73 per barrel mark, and of course, eyeing what's happening with respect to the FOMC decision, because that key meeting will start later today. And other than that, you also have the fact that US CPI data will come later today. There also the expectation is that after Indian CPI, the US CPI will also surprise positively. So that's important. So Nikunj, the data points that we have been talking about, even on the policy day, we were talking that 7 out of 8 data points are looking positive. Yeah. And that's the key takeaway, right?
No, Anisha, there's nothing wrong in the environment per se. You know, markets may just be marking some time, and purely if you look at the Nifty, inflation reading is very important. It is largely important because that, in a sense, is just endorsing the RBI view. The inflation has peaked out, and growth, I think, seems to be coming back. So what will peak out the market? Let's look at the Nifty intraday graph here, and let's look at the FI picture. I'm going to stick my neck out, and I was just thinking through it last night. What will peak to make the markets peak? What is that big signal which I would be worried about? What is that? It is not global cues. I don't know about monsoon. Hopefully monsoon is going to pick up. So monsoon is a bit of a joker in the pack we can't discuss. If monsoons are bad, of course it will have an impact. But theoretically, how do markets move? You must understand the cycle here. And we'll take that as arithmetic. Markets always move like a pendulum. Always move like a pendulum. Does not change. It is only courses, they remain the same, horses, they change. In the month of March, the market had become oversold. Then market started coming back. FOMO effect kicked in, market starting adding a lot of muscle, and we've not added fat yet. Markets will peak out when demand and supply mismatch will start. Right now there is demand by FIs, demand by domestic institutional investors. There would be a case in point where supply would be high, and I think we are reaching there yet. IPOs are coming around the corner. Block deals are coming around the corner. Kotak Mahindra, a large old investor, sold out. So there would be a phase in the market where the IPO market will get vibrant. There will be a phase in the market where block deals will start. There will be a phase in the market where QIPs will start. And I think we are not there yet, but it's a matter of 15, 20 days. I think we will be reaching there. So for me, the IPO calendar, mega IPOs, demand, coming back by corporates who always wanted to raise capital. These are the typical signs which will convince me that FIs, that markets are nearing a liquidity crunch. Because liquidity has played an important role in the way how markets have moved. Second, anchor investors will start selling some of the consumer tech and fintech stocks. These folks sold out in the month of Jan at bombed out levels. Now I think the phase 2 will start because stocks of Paytm, Zomato, all of them are up 40 to 50% from the recent lows. So barring a delay in monsoon or a poor monsoon or something global or something geopolitical, I think markets will peak out in the short term when you see demand exceeding supply, and you can get a sense of that the preparations have started. Merchant bankers are cutting deals. IPO market is getting vibrant. Everybody is talking about large deals moving up. So I think that should happen in July.
And Nikunj, do you also think that we'll see some of these heavyweights who haven't participated then being a part of the market up?
That is what I'm surprised that if the flows are coming back into India, where is Reliance? Where is HDFC Bank?
Yeah.
Why is that Infosys is not participating? SBI has not participated, and these are the sumos of the market which normally make the market look good. So either you will get a big push, either you will, friends, early morning they call you. I'm going to call them back.
You're a little busy right now.
Exactly. I mean, they should know it's a television show which has already started. Okay. I think frankly, if you ask me that for Nifty to go higher, one of the heavyweights has to fire.
Yeah.
The record date on HDFC Bank is down, so maybe it could be the day for HDFC Bank. Maybe Reliance gets some ETF flows or Infosys becomes a contra. I don't know which one, but one of the heavyweights has to fire.
Yep.